Hello. All right, wanted to get on here and give an update of how we are doing with our 18 unit, day 2. Just got back from my softball game, but want to make sure that I give the update every day. So today I spent a lot of time talking to lenders. So we are trying to find some lending for this deal and get some insurance on the deal. So finding a lender, I have talked to probably over 24 lenders at this point. Emailed a bunch of them. I've had phone calls with a bunch of them. And it's just trying to find someone that can. The big thing that we need, our most important aspect is they have to be able to close by the end of the year. And we're on that threshold because we did have a handful of lenders tell us today that like they wouldn't be able to close by the end of the year. So that obviously immediately eliminates those ones because they won't be able to close. So now it's just talking to the other ones, and it's really like I'm just looking at if they say they can close by end of year. The other thing is I want to make sure they actually can, because just because a lender says that they can doesn't mean that they'll actually be able to do it. So some of the lenders I spoke to, I don't know anyone that's used them, and I've asked around to some of the people in the area and they're not familiar with them. So I get a little hesitant, especially when it's agency financing. One of the lenders, it would be agency financing, and typically agency financing takes longer. That's non-recourse. So normally, you buy a single family home, and most loans, it's recourse, meaning like would be responsible if something happened. Non-recourse, you're not personally responsible. So the fact that they're non-recourse and they're saying they can close by the end of the year makes me a little hesitant, because pretty much everyone else I've talked to that does the agency lending said no, we wouldn't be able to close by the end of the year. So that worries me a little bit. The other thing, it's really when you reach out to lenders and they'll send you a bunch of terms, and it's, I'm just going through like, okay, what's the down payment that they require? What DSCR do we have to hit? Which this is a pretty strong deal, so I'm not too worried about that. What's the interest rate? And then what's the term? So are you amortizing this over 20 years, 25 years, 30 years? So that makes a difference, because the shorter the amortization, the higher our payment is going to be. Also looking at what the term is. Is this a 3-year term, a 5-year term, meaning it may be amortized over 30 years, but is it a balloon in 3 years, 5 years, meaning we have to either refinance or sell. We don't plan on selling, obviously, if something goes weird, but typically when we're buying, our plan is to buy and hold for the long term. So it would be having to refinance out of that loan in 3, 5, 7, 10 years. Some of them have been up to 20 years. Some of them have a 20-year term, but 5-year fixed, and then the interest rate's fixed for the first 5 years. And then every 3 years after that, it'll adjust. So there's so many different options, and it's really kind of getting down to nitty gritty. And it's, okay, do I want to do a larger down payment now that might give me a little lower interest rate? Or would I rather keep more money in my pocket right now and have a little higher interest rate? So I've been kind of looking at the kind of the top ones and just trying to figure out, okay, what's, if I go with a higher down payment that has a lower interest rate, it's going to save me on the monthly payment. But I also kind of look at like, okay, if I'm spending $100,000 more on a down payment, how much is that saving me a month on my payment? And I kind of look at, okay, what's the break even on that? And most of them, it's a pretty long time. The other thought is, the election just happened, interest rates, everything's going to be kind of fluctuating, and nobody has a crystal ball. You can read and see, and talking to lenders today was kind of interesting, because some lenders think that the interest rates are going to go up, some think they might go down, some think they're going to stay the same. So it's not, there's no telling what the future is going to have. Do I think there's going to be like crazy fluctuations? No, nobody I've spoken to thinks that there's going to be, these crazy going up super high. And a lot of the loans that we've been sent also have a prepayment penalty. So that's the other thing that I'm thinking is, okay, well, if this has a higher interest rate and a prepayment penalty, do I want to be locked in to something like that? So I'm getting rates. One lender was in the high fives, but most of them, the 99%, have been, I think 6.25 was one of the lowest, up to mid sevens. High sixes is where the majority of them are falling into. Some of the ones that have like no prepayment penalty and a lower down payment are in the low sevens, 7.25 to 7.5. So that's where I'm looking at and just trying to figure out what's the best situation. And my thought process on this, and the brokers that we're working with, our agents, are awesome. They're super knowledgeable. They really know the area and they really know numbers. So it's been really good to call them and just kind of bounce off of them. Okay, here's my thought process out loud. What do you guys think on this? And the rents are strong now, but there is some upside. I think right now the rent roll is, I think it's right around 20. It's actually about 21,000 because there's 2 vacant units. The seller left 2 units vacant to be able to show them, but they did say they're like, these units rent really fast, so if you want, we could get them filled. But a lot of lenders that I've talked to said we're going to use 10% anyways for a vacancy rate, so it's not going to make a difference. Some have said it would be better to have it. Again, it's going to depend on the lender. Better to have somebody in there with a lease is, I didn't quite finish that sentence. So pending the lender, some of them don't care that there's 2 vacant because that's going to be the vacancy they use anyways. Others say that it would be better to have a signed lease in those units. But looking at the options and talking to the agents today, where the rent roll right now is at around 21,000. Once we get those 2 units filled, those units should go for, I think one of them is a 2-bed, so 1,400. The other one, I've been underwriting at 1,650, and that's the kind of conservative for the 3-bed. They have ones in there that are already in the 1,800 range, but I like to kind of like, okay, here's kind of worst case scenario. But our agents they actually know owners of a lot of the, this isn't a complex with, I'm not sure how many buildings. That's one thing that I have to find out. But I think there's at least 20 buildings kind of within this complex, and they're all individually owned. And they know the owners of more than half of them. So they have been able to really get some good intel on this complex because they know at least 3 operators that own over 15 of the properties, I believe it is. So that's been really helpful. So they know like 1,650, like that's if you don't like fix them up nicer, if you keep them a little dated and dirty and not as good, like that's 1,650 is what they go for. But the ones that have been fresh paint and fixed up a little bit, it's not an area where we're talking like granite countertops and top of the line everything, but nicer, clean, not beat up carpet, fresh paint, things like that. So they've been going for 1,750 to 1,800. So having that intel and knowing how many properties are there that they've been able to consistently get those. So underwriting the 1,650. So filling those 2 vacant units will immediately get us 2,400 or 24,000 for the rent roll. And then there's, to get all of the units up to market rents, that would get us up to the 1,650. That would be a bump of about $4,500 a month to get all of them. And then if we can get them up to 1,700 to 1,800, then obviously that would be even more. But again, I look at okay, what's the conservative thing? Because I would rather look at the numbers and be like, okay, this is what we're going to be at the conservative, and everything else is upside. Than me, oh yeah, we're going to rent everything at 1,800, and that's numbers just look good at 1,800, and then it ends up being less, and then it's, oh shit, this doesn't look good then. So I always do it conservatively. So we're coming in at the 1,650. So the other thought process is one of the lenders has no prepayment penalty. They can close really fast. Our agents actually confirmed they have a couple of clients that have used this lender before, and they actually reached out to them today just to be like, hey, just as a sanity check here, this lender, what were your thoughts on him? I know you've used him a few times, and both the people were like, he is a rock star, like he can get it done, hands down, like he is awesome. So having that assurity of close is really important to us, and the no prepayment penalty and their closing fees are only $2,000. There'll be addition, so that's their like origination fee, which is very low. At first I was like, they've got to be missing something. He's like, no, that's for whatever reason, that's what it is. So most of the other ones I was looking at were $8,000. The highest one was up to $20,000, which that one was getting on the expensive side. But knowing that they can close, knowing that we've got a couple people that have used them multiple times and are saying that they're awesome, and not having the prepayment penalty, we're sort of thinking, okay, we close on this where we know that they can close, and it'll be an easier close. They're looser with underwriting, so they won't be nitpicking things. So we know that it'll be able to get closed. Because a lot of times that's what can delay things. Is the underwriter gives it to another underwriter, and they just keep nitpicking, and it's like, oh, well, what's the color of this door? What is the, they can just get they normally don't ask that, but they can just start to ask for just a lot of things, and you never really know what they might ask for. So knowing that they are quicker and easier to deal with, we're thinking, okay, is it the best interest rate? No, it's one of the higher ones that we have been quoted, but if we can do that, go and get it closed and start getting units up to market rent, have this interest rate for a year maybe, and then refinance. And if interest rates are gone up, then we don't refinance and we stay where we are. If we can get something for lower, then refinance. At that point, our NOI will be higher, and where this is commercial, that's what the value of this property is based off of, and that's what is going to get us lending. So if we can increase the rents, get the NOI up, there's even some opportunity for lowering some expenses with utilities. So we're going to look into that when we're out there for the due diligence. There's a boiler there now, which the boilers are expensive to operate. They're pretty inefficient. So we're going to kind of investigate, all right, would it be worth putting mini splits in these units, or what options do we have if we wanted to get rid of the boiler? So but even if we keep that and we just get the rents up, that will increase our NOI. So then when we do go to refinance, we'll have a higher NOI. We'll easily be able to refinance. Maybe to be able to take some money out would just be icing on the cake for us. If we could just refinance it and get into lower interest rate, would be good. But again, the numbers would work at those higher interest rates, and to have no prepayment penalty and the assurity of close is really what's kind of driving us right now. And we're also talking to the seller, because the seller's agent in passing sort of made a comment that, hey, yeah, well, the seller, we know that the buyer wants to close by end of year, so if we get into a pickle, like, the seller could probably work something out to make sure they close. And our agent said, so you mean a seller finance? Like, what would that look like? So they're also reaching out to the seller to find out, like, what exactly does that look like? Because if the seller would be willing to carry for 6-12 months, maybe longer, for us to get things up to market rent and get it stabilized and then be able to refinance and get them out, that might be also another solution. We also talked to one lender that said, we're pretty confident we can close by end of the year, but we also do in-house bridge loans. So worst case scenario, we do a bridge loan just to get you closed by end of the year. And then we just immediately start looking to refinance it into the longer term. So bridge financing is typically your much higher interest rates. We'd probably be in the 9s if we're lucky. It'd probably be 10, 11%, they said, interest only payments, and they wouldn't do any prepayment penalties. Like with this situation, we'd literally we'd close it, and as soon as we close the bridge loan, we'd immediately start the process to get it refinanced out. He goes, but that would be like an absolute worst case scenario, do a bridge loan just to get it closed for year end, because we have to close by end of the calendar year for tax purposes. We do not want to have to pay any capital gains tax, so we are pushing to close by end of the year. So we definitely have some options, which is good. Some of them are better than others, but now it's really just kind of narrowing down what's the lending going to look like, and that's our top priority right now, because we know that it's going to be tight to close by the end of the year. Mainly the holidays definitely make that a little bit difficult. So normally if this wasn't going to be hitting 2 holidays, it wouldn't be it would still be snug to get it closed in 2 months. The 45 to 60 days is kind of the norm, but then you throw in Thanksgiving and you throw in Christmas, that's where it kind of makes it just a little more complicated. But we're really pushing just to make sure that we get our financing figured out. And we'll probably, there's a couple more that we're waiting to talk to. Actually, one of the lenders that I reached out to responded back, and he said, what a small world. He goes, we actually have the loans on this asset right now. So that was cool. And he goes, and this is probably one of the most organized and well-managed assets and manager that he goes that I've worked with. They're awesome. So that was really good to hear. That gives me comfort knowing that what they're providing us for numbers is more than likely accurate, that there's probably not going to be things that we get to the property and go, this is not what we were told. So that's what we're hoping, and I'm feeling more confident about that, especially after that lender had said, yeah, we've worked with them and they're awesome. They're one of the best managers that we've worked with. So they're super organized. They manage very well. They're great operators. So that was really good to hear. I asked if we could take over their loan, if we could assume it. He, of course, said no, but he's like, well, just had to ask, because it's obviously a much better interest rate because they got it a few years ago than what we're getting today. But so that was our day today. I spent most of the day on the phone talking to lenders and just going through, and it's such little figuring out, do we want to put more down and have a different interest rate, and just really figuring out those numbers and figuring out what's going to work best, and then plugging those potentials into the model and seeing, okay, what does that make our finances look like? What does that make our cash flow look like? Things like that. So obviously it's nice to do a smaller down payment because then I keep more money in my pocket, but that means a higher monthly payment and less cash flow. So it's the trade-off where I could put more money down, but it's going to be more money out of pocket, but I'm going to have a lower payment and more cash flow each month. So it's just really analyzing those numbers, but knowing that this property does have as much potential as it does. And out of the 18 units, 7 of them are month to month. And luckily the lowest ones are the ones that are all month to month. So we'd have to look into getting, either seeing if those tenants are willing to go up to market rent, or maybe having to not renew those leases and fix up those units. My guess is we will need to fix up a couple of those units. I think the 2 units that haven't been updated are the 2 units that are the lowest price because they've been there the longest. So that's our assumptions. We have not had that confirmed, but that's kind of typically when you have units that are significantly below market, they've been in there a long time. And if they've been in there a long time, they're typically not doing updates to the units. So we are assuming that those 2 units that are the lowest price are the 2 units that have not been updated. So we'll take a look at that. But yeah, it's really just kind of all the little numbers, figuring out how we want to fall. And we are leaning towards making sure we can close. It's the best thing, but we are sort of leaning towards the option where it's a lower down payment with a little bit of a higher interest rate, kind of suck it up for a year with a higher payment and not as much cash flow. But then when we get our NOI up, when you get those rents up to market, then be able to go and get some better financing and refinance that out because there's no prepayment penalty. Where some of the other ones, they do have a prepayment penalty. So if there wasn't a rate drop or something like that, we'd be kind of stuck in those. And those were all the high sixes. So it's within 1/4 to 0.5%. Most of the quotes we've been getting. The ones with the best interest rates are the ones that probably are not confident they'd be able to close this by the end of the year. So that's the other thing, is if we did the one with no prepayment penalty, I mean, we could immediately start to refinance into the other agency financing if we wanted to. Or what we want to do, as I've said, get some of those units up to market rent, increase our NOI so the value of that property is higher. But yeah, and with the insurance, I've reached out to a few insurance brokers and waiting to get some quotes on those. And we're waiting to get the information on the current insurance carrier on the property now. Because if they have, I have in my underwriting, so the insurance right now was around $8,000 a year. And I have in my underwriting that going up to $15,000 a year. So I don't think it would go up that high. And looking at a lot of the other properties that we've been underwriting, none of them are up to that high. But I want to be like super safe if for whatever reason it goes up a ton. So if we get quotes and it's $8,000 to $10,000, then that's awesome. That's $5,000 a year that will be dropping on our numbers. But there are some with insurance right now. Insurance is the reason we had was the nail in the coffin for the 7-plex we backed out of. So we are being very cautious with the insurance. So we can find talk to the current insurance carrier for this property and see where they're at, and if we can keep them and they have good coverage and good rates, then that's good. And they obviously know the building. They've been insuring it for years. So they're comfortable with it. They know it, which is always a good thing. They know the history of it. So, yeah, waiting to hear back on some of those, but that's what we're pushing for now. And as I said, we booked our flights. We fly out there Monday. We'll do the inspection on Tuesday and just go through our due diligence. So if there's anything specific that you want me to talk about, I do plan on trying to share as much as possible and giving as much detail as possible. I know when I was just getting started, knowing the nitty gritty and the kind of what that whole process looked like was something that I was always curious about. So hopefully this will be useful for you, and just knowing what is going on, what we're looking at, how we're looking at the numbers, what we're doing for the business plan, things like that. So if you have specific questions, specific topics you want me to make sure that I cover, please comment, shoot me a DM, whatever it is, and I will be more than happy to make sure I talk about those and dig into those. So what else? Yeah, I think that's it for now. So I will continue to give updates, and we'll be doing definitely a lot of videos and some longer ones while we're in Chicago walking the property, and just giving you guys as much details as we can. So yeah, give me a follow, give me a like if there's anyone you know that is curious about how this process goes. Definitely, share my channel with them. And if you are a passive investor and you're curious how the process works, you'll be able to see how we go through this. As I've said, we definitely try to underwrite conservatively because we want to make sure that when we buy something, the numbers are going to be good and everything else is going to be upside. So this is also a good behind the scenes for you as a passive investor to really get an understanding of what the process looks like, and if you're talking to people, it should give you some ideas of the types of things to ask potential operators and potential people that you're looking to invest with, how they do the process, what they look at, things like that. So it should be some good information all around. So thanks for watching, and we'll give you another update tomorrow.